Hello, and welcome to another edition of BeaverFinance. I'm your host, Robert T. Anderson. In today's series, we're here to talk to you about RSPs, or Registered Retirement Savings Plans. And we're going to talk to you about why an RSP can benefit you. So this is part 2 of our RRSP series. In our first video, we talked about what is a Registered Retirement Savings Plan, or RRSP. In this video, we will dive deeper into how to best use the RSP to reach your financial goals. So first, I thought, in case you missed our other video or you'd like a refresher, we'll do a recap on what an RSP is. So an RSP is a registered savings plan in Canada. So it allows for tax-deferred growth, which means that withdrawals are taxable, but all earnings within the RSP are tax-free until withdrawal. So they call it tax-deferred growth, but in the interim, if you do make withdrawals, they are taxable. Now, the big perk about RSPs is you contribute pre-tax contributions, which means for your contributions to the RSP, you do receive a tax deduction. So what is a tax deduction? Well, let's say you earn $100,000. That's your salary. And you contribute $1,000 to your RSP. So what would happen is you would have a total income of $100,000. You would receive an RRSP tax receipt, allowing you to claim an RSP tax deduction, which would then lower your taxable income to $99,000. So you would now only be taxed on $99,000. And most likely your employer would have already withheld and remitted taxes to the government on your behalf on income of $100,000. So when you go to file your income taxes, you will receive a refund based on that $1,000 you contributed. So the benefit is you can now take that refund and do something with it. So we'll talk more about that. So that's a recap on RSPs. So RSPs, the focus is definitely retirement. Obviously, there are other purposes for RSPs. The first being the Rsp Homebuyers Plan and also the Rsp Lifelong Learning Plan. We do have other videos explaining both in more depth or in depth for you. So you can check out our Rsp Homebuyers Plan video and our Rsp Lifelong Learning Plan. However, the Rsp Homebuyers Plan allows you to take out essentially a loan from your RSP of up to $35,000 that has to be repaid in the subsequent 15 years. So that's great in the sense that it allows you to help save for a down payment while also receiving a tax break for those contributions on that RSP money going in. So you'll definitely want to check out that other video to fully understand the Rsp Homebuyers Plan. So, and then the second is the Rsp Lifelong Learning Plan. That's a plan where you could potentially take out to $20,000 if you have a spouse, and you have 10 years to pay that back. And as well, if you want to learn more about that plan, you can check out our video on the Rsp Lifelong Learning Plan. So the other drawback of the RSP is that withdrawals are mandatory by the age of 71. So the year in which you turn 71, by the end of that calendar year, you must set up your first withdrawal. So that is a potential barrier if you're not going to be using your RSP right away to help supplement your retirement. So you would think if you're not going to be using your RSP right away for retirement, you're probably in a good situation where you have other sources of income or assets. And then there's other planning that can be done to manage your RSP. However, be mindful of that age 71 where you would then have to make decisions. RSPs are also by retirement typically converted to RRIFs, so Registered Retirement Income Funds. We also have a basic video on what is a RRIF that you can check out on our YouTube page. Lastly, on withdrawals, a point that we want to make for you is that any withdrawals outside of the home buyer's plan or lifelong learning plan, they do eliminate your contribution room, meaning each year you earn you earn 18% of your income up to a maximum. However, if you do withdraw from your RSP, you will be taxed on that income, and then you also lose that room, so you wouldn't be able to recontribute that money unless you have other RSP room. So that is a caveat to try to deter people from using their RSP for other purposes. Obviously, the government's created this program to encourage saving for retirement. So they do want to make sure that people are using it as such. Now, another perk of the RSP is that it's been around long enough that the U.S. Government has recognized the RSP as a retirement savings plan in the tax treaty, meaning if you hold U.S.-based investments, whether that's stocks, ETFs, or mutual funds, any dividends that may be paid out to your RSP or reinvested in your RSP to purchase additional stocks or units of your funds won't have any tax being withheld for foreign tax purposes. So that's something important. If you are going to hold US-based dividend investments, keep those in your RSP so that you're minimizing taxes. Sometimes I hear people hold US dividends in their TFSAs or non-registered accounts, both in which would have issues with that US tax, foreign tax withholding. So that is something that you'll want to manage, is your asset location. Next, obviously, the tax return you receive from contributing to your RSPs, that money, is tax money you've already paid. That if you're going to contribute to your RSP, should be put to work, meaning you should evaluate your financial situation and decide, okay, where is this money best to go? Do I have any debt? Should I go to debt? How's my emergency fund? Have I used it? Do I need to top it up? Should I make an extra mortgage payment with this money? Or can I recontribute this tax return to my RSP and get a further tax deduction for the next subsequent year? So all are good, potential answers, but you need to evaluate which one is best for you. And then we did briefly cover what different types of investments you can hold in your RSP. These would be anything from different stocks, bonds, ETFs, mutual funds, REITs, and many other different types of investments. So it does have a wide variety for you to choose from. we have bonus material for you on RSPs. So one tip we want to make sure that everyone always remembers is to utilize the first 60 days of every calendar year to consider topping up your RSP. Why should somebody do that? Well, depending on your work situation, whether that's, you maybe worked some overtime, you got a mid-year raise, you have some other income of some source, you're in business, you had a much better year than anticipated, or any other potential tax situation, or you just have extra funds sitting around. The government allows us the first 60 days of every calendar year to take the time to consider topping up one's RSP. So that can be a way to quickly get in a last minute RSP contribution to subsequently include that tax deduction on your income tax return for the following year. So right now it is January 2021, so we're in that first 60 days to consider contributing for the 2020 tax year. If you were to make a top up to your RSP right now, you'd be able to take that receipt and after February 22nd, you could start to file your income taxes and get a deduction, and then in the next month or so after that, start to expect your tax return and be able to quickly put that money to work. So hope you take advantage of that bonus tip. Now, how do I use my RRSP, or my Registered Retirement Savings Plan? Well, for myself, being self-employed, I do have other options for potential tax deductions. I also have potential different options for investing, whether that's corporate, personal, tax-free savings account, you name it. However, I do still like to receive tax deductions. Everyone does. And so I do contribute bi-weekly to my RSP. And my RSP, because it's solely for retirement, I've got other assets, other investments, and other cash for all my other goals, all my other expenses that I'm expecting in the future, moving, family, all those things coming up. I've got all that planned. I can take on full risk in my RSP. I've got over 30 years till retirement. So I've got predominantly US and global stock exposure only. I have a little bit of US dividend, some US science and technology. I've got US, that all cap growth fund that I talked about before. And my sole goal is annual growth. So I'm not too worried about, short-term ups and downs in my RSP. I'm looking for, sub 10% growth every year. Between focusing on growth, US and global, and also regular contributions, I'm quite confident. If I can't do it every year, my average will at least be that. So that's how I use my RSP. It's very aggressive. Now, if you did miss our full video on RSPs, on the basics, please go to our YouTube channel and check out that video next. Also, if you like this video, please like and subscribe so to be notified on future videos. We've got a lot of content coming out. You won't want to miss it. Question of the day. So let us know if you have an RSP, and if you do, how do you use your RSP? What's in it? How's that working out for you? Let us know below in the comments. We'd love to hear from you. So you can also catch us on Twitter and Instagram at BeaverFinance. You can stay connected. We put out daily content on those platforms. And thank you for watching this video. We'll see you in the next video. Take care.